And finally tonight, the latest in our series examining the changes in the economy in the 5 years since the financial crisis began. Tonight, we look at the nation's banks and how they survived the downturn. Are they in a better position now than they were before? And if not, what else needs to change? Kayla Tausche has the story.
5 years ago, Wall Street brought the financial system to its knees, making toxic loans and then selling them to others, all borrowing to make it happen. As investors lost confidence, the markets played musical chairs. 10 banks became 6, strapped with some $200 billion in government aid and an avalanche of regulation.
I think that the capital program we designed and to get out and put capital into hundreds of banks very, very quickly and recapitalize the U.S. financial system is a huge success, and that money has come back.
The money took a few years to come back, but changes hit the industry immediately.
We've dramatically brought down leverage, increased transparency, reduced our level of risk, and made changes to how people are paid.
Most of those changes, described by Mack at a 2009 testimony, stuck. Leverage, the amount banks borrowed against their assets and thought to be the culprit, is cut in half. In July, Washington required it to fall even further. Banks have raised credit standards and squeezed consumers, but now they have fewer risky assets compared to before. And the capital backing up those risky assets doubled. Not to mention they're saving more cash for a rainy day, $1 for every $10 in assets. A big chunk of cash is also going back to the government in fines. Banks paying nearly $70 billion in crisis-related lawsuits, a number that's still growing. But shareholders are sitting tight. Bank stocks are up 230% since the March 2009 bottom. Many in Congress say more has to be done. Senators Warren and McCain, Brown and Vitter, all vying to break up banks once and for all. Wall Street fighting to mend fences in Washington and with consumers.
One of the lessons we learn now is they're inextricably wound together. Wall Street can't prosper with Main Street in poor economic health.
A lesson learned, if only in hindsight. For Nightly Business Report, I'm Kayla Tausche.